easy to trust, a good risk to reward ratio, because that's very important. They work every time, and then tested and proven. By the end of this video, you'll have a clear understanding to the best trading chart patterns. Now look, these make consistent profits because these have worked for me for the last 6 years, and honestly they're really easy to replicate, and more enough they show up a lot in the charts. So without any further ado, let's get straight into it. We basically have reversal patterns and then continuation patterns. So let's start off with reversal patterns. Now you guys now do understand that the price is always going to move, say in an uptrend, but then at some point it's going to reverse. So if I could give you an example, say we had this as an uptrend, at some point the price is finally going to reverse and finally push back the downside. So in this scenario, we do have some chart patterns that are really important for you to easily and quickly identify the reversal before anyone else does, and that actually means you get to the entries much earlier than any other trader. Then on the other side, say we have a downtrend. Obviously at some point the price is finally going to reverse and then push to the upside, and again you need to really have those early entries. And how do you do that? Well, you can easily trace those by using these chart patterns that I'm about to show you. Let's get into the very first one, and we call that the double top or equal highs. Well, why equal highs? Well, you can clearly see we have a high here and then we have one more here, and that means in this scenario the price is initially pushing to the upside just like that, and then gets to a point, forms a high, all right, and pretty much drops, but again it comes back to form another equal high, and that means this would indicate a reversal now to the downside. So in actual sense, this is from the upside to the downside. All you need to do is watch out for this and obviously follow the other instructions, just like how I'll share with you later on in the video, for you to confirm that trade. So this is often going to happen a lot more whenever we have a change of trend, all right, from an uptrend to a downtrend. Please, I want you guys to pay close attention. These patterns work literally on all time frames. Sometimes you could use them on the H4, but for entries, I would always say use these on smaller time frames. So this is a clear example on gold, and as you can clearly see, the price was initially pushing to the upside and comes to form a high, all right. Now in the first sense, I would think, or maybe the price just pulling back down to later push up. You guys get that? But actually what happens is price pushes down and then pushes up, but fails to break the previous high, and yep, there we go, forms another high, all right. So you could call this a high, and then we have another high. That means those are equal highs, or in the other terms we called it tops. So this is a double top, and guess what? Boom, we have a huge rally to the downside. So we've had that, and next up is for you to confirm your entries so you're able to take that trade. Really easy and simple. Now since you made it this far, I invite you to the exclusive family by smashing that subscribe button. The goal is 1 million subscribers, and you can be part of this exclusive community. We have a saying, let's talk and more action. And with that, let's dive straight back into the video. Next up, we have a double bottom. Now this is pretty much the opposite of the double top. So in here, the price is initially pushing to the downside, all right, and then we have a double bottom over here. Price forms another. Now we have the second bottom, and now that makes it a double bottom. Guess what? The price finally pushes to the upside. Now if you do want to name this, we call this the neckline, and sometimes what's going to happen is the price, after breaking out, it's going to come back to retest that level and finally push to that direction. That's very, very important. So we've said this is the neckline. On the other side, you could also call these equal lows. What does that mean? Well, the price initially pushing down from the low, but it couldn't break the previous low, and that means perhaps buyers are coming in to oppose now the price to push to the upside. So if I could do a clear illustration of how this is formed, it means we have the price pushing down, and it forms a low, so we shall call this a low, and comes back for a pullback. That's normal. Remember, we have a momentum push, a pullback, momentum push, pullback. Now that the price comes back for a pullback, we would expect it to just push down to break even the previous low and, you know, continuously push down. But I guess what? It doesn't actually. It forms another low that is pretty much equal to this one, and then boom, it rallies up, comes back for a pullback, and then we have a change of direction to the upside. So we have this, all right. So in here again, you have to mark out your neckline, waiting for the price to come back for a retest at this area, and then later push to the upside. Easy, very, very easy. So in here, it's from from a downtrend to an uptrend. Next up, we have our head and shoulders. Now, this is a very, very common pattern, and I want you guys to really understand this. So head and shoulders, we have this as our shoulder, we have this as our head, and we have this as our shoulder. Pretty much easy. We have a shoulder, head, and then shoulder. But this is how it actually looks. So we have the price pushing up to form a high, comes back for a pullback, and the price actually does break the previous high to form a new high, which is a good sign. Obviously, since the trend was to the upside, we would say, oh, or maybe the price is just going to come back for a pullback and then push up. Well, what actually happens is the price comes back to even break the previous high. It comes here, and there we go. Now remember, since it's an uptrend, in mind we thought the price was going to rally to the upside. Actually, the price pushes down. So we call that the head and shoulders. Again, this is pretty much a confirmation of an uptrend now to a downtrend. And this also happens a lot often. We do have a good example here. This is on GBP/USD, and as you can clearly tell, now this is on the H4. So we have this is our shoulder, we have this as our head, and then we have this as our shoulder. And guess what? The price finally rallies down. Now let's move on to our next pattern, and this is the inverted head and shoulders. So it's just like the head and shoulders, only that it's now inverted. So we have our shoulder here, we have our head, and then we have our shoulder. In this scenario, it's from a downtrend, and now the price is going to the upside. Remember, we have the same scenario where the price initially pushing down, comes back for a pullback, pushes down to break the previous low, which is a good sign, but we do expect the price to just come back for pullback and then drop down. What actually happens is the price breaks the previous low to form this level here, comes back for a pullback, and now there you go. So it now pushes to the upside. So this is now from a downtrend to an uptrend. We have a good example again on GBP/USD on the H4. You can clearly tell we initially had a push to the downside. We have this as our first shoulder, and then we have a head, all right, and price pushes up to form our other shoulder. Do you notice that we also have a double bottom here, and then the price pushes up? Really, really easy. So these are the most common and actually most profitable patterns in the reversals. You can easily use these if you're going to trace reversals. Remember, I said you can use them even on smaller time frames, most especially when you're looking out for entries. If you really want to easily trace them, you can first switch your chart to the line graph, find them, and switch back to your candlestick chart, and you're good. All right, let's move on to continuations. Now, continuation patterns pretty much form when the price is already trending. So trend following, and they happen a lot often. So good for entries and exits. So the price is already trending to the upside or trending to the downside, and all you need to trace are these patterns. It's pretty much just a combination of candlesticks and looking at how the price behaving, so you're able to trace those patterns. There are so many, but I chose out the ones that I use and that really get me the best results. Actually, the best thing about this is they're really easy to trace. Now we have the very first one as the bearish flag. Initially the price pushing down, and then it does form just a bit of a consolidation off here. All right, forming a trend line down and then another trend line. Now remember, when we have two trend lines and the price is trending in between, we call that a channel. So we have a push to the downside and the price forms a channel this way. Remember, it's initially to the downside, so we would expect a breakout to the downside. Most interesting part is how these levels are respected. Often enough, once the price breaks out of the flag, it's going to come back for a retest and then proceed down. Really easy. These ones can easily be traced on smaller time frames. You can clearly see this is on the H1, on the euro dollar, but you can also even find them on the M15, because these ones are even much used for entries. You've done all your analysis and now you need to confirm your entries only in trending market. You guys get that? We have a clear example here. This is on gold. So we see the price pushing down, comes to form just a little bit of consolidation. We definitely expect a pullback here and then a drop. So this is a really good example. You can clearly see it was a downtrend with the price breaking all the previous lows to now form this bit of consolidation. One thing that I want you guys to understand is how this consolidation is formed. Remember that just formed when we have a balance between the buyers and sellers. So in other words, here we have buyers trying to out-challenge the sellers, and they just can't, and that's what causes this. But at the end of the day, whenever the trend is down, the overall market movers in this scenario, who are the sellers here, would finally have to break the price back down to keep the momentum on. Then we have our next up as a bullish flag. You can clearly see, so we have the price trending to the upside, forms this pretty much sort of a consolidation. We have our trend line down, then we have another trend line up to form a channel, and the price finally breaks out. Remember again, as I mentioned, more often enough, it's going to come back for a bit of a retest and then push to the upside. So that's also very important to look out for. Now, for the fact that you are still watching, I do understand how badly you really need to become successful at trading. And one thing I can tell you is it's totally possible. Now, I did create a free video that shows you the stages of becoming successful from A to Z, from the unprofitable trader to the successful profitable trader, and it's entirely free. You're not paying anything. Just go ahead and click the link, fill the form, and after that, I'll send it over straight to you. Please watch that and understand the stages, and most importantly, apply what I show you. Awesome. Let's get straight back into our breakdown. So we still have the bullish flag, and pretty much just like that, once the price breaks out, we expect a push to the upside. Next up, we have another bearish pattern. We call this the bearish wedge flag. So in here, it's also like a flag, just like the first one, only that in here it comes and gets a bit smaller. Remember, for the other scenario, we had it just like that. It's pretty much equal, but in here it gets a bit smaller, and boom, we have a breakout back to the original trend. All right, so we also have an example of here drop. We have crazy bearish momentum, and there you go, we form this wedge, and guess what happens next? The price breaks out to push down. So let's quickly move the chart and find some real examples of these patterns. So I want us to start off with reversals, and I think we do have a good example here. Now this is on GBP JPY on the M15, and this is how the price was initially looking like. So we have the price pushing down, breaking a low, all right, and you know, lows, and then we have another low here. So in other words, this was a clear downtrend. See that? All these levels breaking down, and actually the price gets to a point here where it does form another low. All right, comes back for a pullback, but instead of pushing back down, that actually doesn't happen. Guess what happens? Well, we see now something that we've just discussed. So we see this as our shoulder, and then we have another shoulder formed, and now this becomes our head. So in other words, we have this as our shoulder, then this bad boy here, and then we have this as our head. So in other words, we just witnessed a reversal from the downside to the upside. Easy stuff, all right? Again, as I mentioned, once the price breaks out, more often enough, it's going to come back for a bit of a retest on that exact level before the whole new move actually starts off. So if you're going to be trading and taking entries, the best option is to have your entries somewhere around the retest areas. Say we have this, all right? What you need to watch out for is the retest, and then now take that trade. So you don't want to enter instantly here. You don't want to enter instantly here. No, wait for the retest and then have your entry in, all right? So that makes more sense and pretty much reduces the risk, all right? So if you had this, next thing is to have your stop loss just lightly below the neckline or your retest zone, and just hold a trade, all right? You could go for 1 to 2 or 1 to 3, all right? Let's go ahead and find other examples. A good example here. Now, this one here isn't a double top. It's actually a triple top. We have 1, we have 2, we have 3. Having equal levels means the price just couldn't break above. So it had to form another high, then another high, and then that drop. Again, this is also a good confirmation of a reversal from an uptrend and now to a downtrend. Perfect. Let's just go ahead and now find some of our continuation patterns. Now this is a bearish wedge as a wedge flag. You can clearly see we have pushed the downside and the price forms this pattern that we just shared. That we have this and the price breaks out to push to the downside. So these patterns are going to happen. All you just need to do is to really get good at tracing them. And by the way, remember, it doesn't even matter whether you do trade smart money concept, demand and supply. No, that doesn't matter. All you need to know is these patterns are going to be needed at some point, and you must understand how these work. And most importantly, practice makes perfect. Nothing other than that. The more you practice, then the better you are going to get good at this. As well as keep it less talk and more action. All right, please just go ahead and subscribe if you haven't subscribed in the first place. Well, I don't know why, but I'll see you in the next one, and with that, cheers. Let's go.